Trading with Pitchfork's warning and sliding lines. Please take a short moment to read the risk disclaimer, and don't forget guys that you can join our VIP Telegram group by accessing the link posted right below this video. And don't forget to subscribe to our YouTube channel. Thank you guys. So let's take a look here on the daily chart on the euro versus the US dollar live. Here we have a live chart here, trading chart, and let's use the Pitchfork trading tool. You will find it here in TradingView or also in MetaTrader 4 and MetaTrader 5. So I've decided here to select 1, 2, 3 points to draw a descending pitchfork. Okay, you can see that the price has dropped right below the medium line. It has increased a little, it has decreased again, it has found support without reaching the lower medium line of this descending pitchfork. So here we have the upper medium line, the medium line, and here we have the lower medium line, guys. Okay, so now I want to use inside sliding lines, and I will use 50% Fibonacci lines at the half of the distance between the lower medium line and the medium line, and the upside 50% Fibonacci line, it is drawn at the half of the distance between the upper medium line and the medium line. So here we have the 50% Fibonacci line, and the downside 50% Fibonacci line here. And as you can see, the price has decreased, has reached the medium line, has rebounded, has retested the upside 50% Fibonacci line, and now it has dropped here to approach and reach the downside Fibonacci line, where it has found strong support. It has increased and then it has decreased again to retest the downside Fibonacci line, and here it has increased again. It has registered a valid breakout here above the upside 50% Fibonacci line, confirming a further increase. And as you can see here, the price has escaped from this descending pitchfork and it has continued to increase. So you can use these Fibonacci lines, 50% Fibonacci line, as inside sliding lines, guys, okay, as potential support levels and resistance levels. I will also use warning lines and also the 150% Fibonacci line. So as you can see here, one moment, we can draw the warning line, the first warning line at the same distance between the medium line and the upper medium line, or between the lower medium line and the medium line. Okay, so here we have the first warning line, and at the half of the distance between the upper medium line and the warning line, we'll have the 150% Fibonacci line. Sorry guys. So as you can see here, the price has increased, has registered the valid breakout here above the 150% line, and then it has continued to increase towards the first warning line. And now the price has decreased a little to test and retest the broken warning line, and if the price will stabilize right above it, then it could continue to increase towards the second warning line. So now we'll have to draw it manually. So we'll take this distance, and here we'll have the second warning line, and at the half of the distance between the warning line 1 and warning line 2, we'll have the 250% Fibonacci line, sorry. So here we'll have the 250% Fibonacci line, which could be used also as a potential target, as a potential resistance. Okay, let's remove these drawings and let's start again. I will select other 3 points to draw another descending pitchfork, 1, 2, and 3. And as you can see here, the price has decreased. It has found temporary support right on the downside 50%. It has jumped to retest the medium line. It has decreased towards the lower medium line, retest at the medium line, false breakdown here below the lower medium line, further increase towards the upper medium line, which acts as an important dynamic resistance. Okay, here we have the medium line, the lower medium line. Here we have the first warning line. Also, here we have the first warning line, upside first warning line, 150% Fibonacci line. And sorry guys, and the downside 150% Fibonacci line. You can see that the price respects these lines, these levels, as support, as resistance. As you can see, 50% inside of the descending pitchfork's body. So you can use these sliding lines, inside sliding lines, outside sliding parallel lines, the warning lines as potential targets, as potential reversal points, exhaustions, levels. So you can see that the price has decreased in the end towards the first warning line, downside warning line, and then it has started to increase again. And it has found strong resistance here at the upside warning line, and now it has decreased to retest the upper medium line. I will delete these from here again, and let's take other examples here. Now let's draw an ascending pitchfork, and here we have the medium line, the lower medium line, the upper medium line, the upside warning line. This is the downside warning line, 150%. One moment, 150%. The downside 150% Fibonacci line, the upside 150% Fibonacci line, and also the 50% lines. Okay, you can see here as well the price has increased and it has found resistance at the upside 50% Fibonacci line. It has increased to test and retest the medium line, and then it has continued to increase towards the 150% Fibonacci line. Unfortunately, here it has failed to reach the next target, represented by the upside warning line, and then it has decreased, retest of the medium line, retest of the upside 50%, drop towards the lower medium line, retest of the medium line, and here we had a valid breakdown from this ascending pitchfork, signaling that we may have here a potential drop. Drop, decrease here to retest the, or a temporary decline here to 150% downside, 150% Fibonacci line, retest of the lower medium line, and then drop, valid breakdown here below the downside warning line, and then we had a downside continuation. And let's draw here a manually second warning line using the same distance. So I will draw it right here, okay? And you can see how the price respects these levels. And here as well, you can use, let's say that the price starts increasing after testing, retesting the lower medium line, maybe something like this, and you can use the downside 50% Fibonacci line as a potential targets and not the medium line, because there are situations when the price fails to move towards the medium line, to approach to reach the medium line, and it could only increase to approach and reach the 50% Fibonacci lines from inside of an ascending pitchfork or on a descending pitchfork. So you can use all these lines, sliding parallel lines, warning lines, as potential targets, as potential resistance and support levels, okay? And you can use also other trading and technical tools, indicators, which will help you to identify great trading opportunities. Okay guys, that's it for today. Don't forget that you can join our VIP Telegram group by accessing this link here, Learn to Trade Go Premium. Please subscribe to our YouTube channel, and you can visit also our website. And guys, if you liked this video tutorial, please give us a like. It will be highly appreciated. Thank you guys. Bye bye.